Hello folks, I'm LA Little and this is your daily NeoTA wrap, where we take a look at these markets and we do it from a neoclassical perspective each time, asking ourselves what happened today and what does it tell us about the coming ones. Do this show 4 times a week, Monday through Thursday, broadcast at or before 10 o'clock Eastern Time as best we can. Not always can get it there, at least the last couple of days it's been pretty tough. We've had a lot of issues. Hopefully tonight will be better. So we do it before, at or before 10 o'clock Eastern Time, archived on YouTube. It's available there for your convenience. You can subscribe, and if you do that, then of course you can get content pushed to you, and at least notification of it so that you can easily view. We had a big day yesterday. We talked about that yesterday in the kind of the broadcast that went out kind of late last night. And tonight, if we look at what happened, we really didn't get the follow-through that we were looking for, and a lot of it has to do with rotation and the lack thereof. If we look at it, Dow was down, what is it, a little over 0.5%, 117 points. S&P's down 0.5%, 10 points. Then you had the Russell leading the pack on the way up, NDX, NASDAQ. So we've seen this for a long time where these are the leaders, right, and then these are the laggards, and it continued that way today. We had gold almost flat. Silver was actually up. The metals complex held up pretty good despite the huge reversal back at the other way in the UUP, which was really the kind of the story of the day. It's like it was a one-day wonder for overseas currencies with respect to the dollar. The dollar just totally came flying back up, gapped up, never even looked back today. And here we are almost at the lows again on the other currencies. So we'll talk about that a little bit more as we get into it. But, you know, that's a big tell, and that pushed oil back down. Oil had came back up to do a retest, regen bearish. Looks like it's going to try to generate lower and get a break on multiple time frames if that happens. Bonds, there's a question from a viewer tonight on it. We'll take a look at those as well. They were down today also. All right, let's pop to the charts, see what we got here. I'll start with, I'm actually going to start with the NASDAQ, the composite. I had the S&P up, but I want to start with these. And the key thing now, those indexes that held well, in other words, the NASDAQ, the NDX, the Russell, they all had lower volume, but none of them hit the highs from yesterday, which is a perfect situation if you want to be bullish. So you got a high of 5,157 yesterday. Today you got the 5,002. So you go up, you close higher, you don't go over and under, and you're poised just up underneath the lows. This market wants to try to break them out, and it's already done that on the Russell, and now it's wanting to do the same thing over here. So, you know, the setup here is nice. It's got it all set up. Everything's ready to try to break this thing out. We got a Friday. We got quad witching tomorrow. I wouldn't be surprised to see them at least go test that high, if not try to break it or actually break it out. Let's see what the numbers are on that one. They're doing 19.3 versus 16. So if they do break it out, it's going to be about staying over that high. Because you're not going to probably have the volume. Well, actually, it's quad witching. You may have the volume tomorrow on a breakout. So actually, that would probably be the best of all worlds, right? Okay, so that's the NASDAQ. That's the broad composite. NDX, same story, up. Doesn't quite get to the highs, has a little doji today, but it's over, you know, the swing point low. It holds it twice. We talked about this yesterday. It gets over this bearish retest regen zone. It stays over it now 2 days, and that's usually what you want to see. You want to see an extra bar. In other words, you get over it, you get a bar over it. That says it's probably for real. So that's another good story. And then if we pop over to the Russell actually has a nice situation itself. And that is that it stays under it, the big volume from yesterday. It's poised just up underneath it. Everything's perfect for try to do some continuation there. Now let's go to the laggards. And the laggards were, of course, on the Dow and the S&P 500. And so what we saw here was kind of this, stair step. I can't make up my mind, move higher, right? You get a day up, a day back, a day up, a day back, a day up, another day back, right? All the way up. What's the struggle here? Well, the struggle is energy, basic materials, right? Those are the two big. Financials now, those are the ones that are really struggling. And why is that? Well, we can't get rotation into any of those sectors. And so the push up here is like, a drunken sailor going up some sort of a steep cobblestone inclined, path. It just wobbles and wobbles as it goes up. Again, just like yesterday, this one, just like the other indexes, this one doesn't get over the high, so you don't have the over-under kind of thing. Just settles, it gaps down, just stays there all day. It's not a bad case. It's a good case. It actually hit that high with volume. Looks to me, this thing's setting up to try to make it up higher. And I wouldn't be surprised to see it get to the top before it's done. Now, if it works the way it's laid out, the Russell would extend, the index and the composite would extend, make new highs on the composite, and this would crawl right back up to the top as the index is broken over. If we look at the Dow Jones, and then that may be where things kind of fall apart again. If we look at the Dow Jones, weaker, doing the same sort of stair step, it hasn't got nearly back up and over. The breakdown bar here, 18,135, it hasn't gotten over it. Let me see on the S&P one more time. That breakdown bar, it got right to it yesterday, closed just under it, and couldn't get over it today. So, the next test here, the next confirmation, if you will, is for these to get taken out. And then once you do that, there really isn't anything else, right, until you get to the highs. So that's kind of the last straw. It's kind of the one thing that's kind of hanging out there saying, hey, maybe this is not for real. But given everything I see, the preponderance of evidence, more than likely it is going to make it over that and try to trade higher. Overseas, same story. Europe grudgingly pulls back in a little bit, just doesn't want to give much up. After that big run, they're not, the buyers are going to be there, and so they're going to push it back up. If we look at China, China still pushing highs. Hong Kong is starting to catch up. Taiwan now has taken off brand new highs. Asia looks pretty strong. You got a little mixed pocket here and there, but for the most part, pretty strong. Europe pretty strong. Here we go again. Why QE everywhere, right? It's QE to infinity and beyond. It just doesn't stop. And although I've said before, and I'll reiterate it here one more time, I don't think this year is going to be like the others. I think you're going to see a lot of turmoil in these markets, and I suspect a lot of that is going to be related to the economics and to the earnings. And those earnings are coming up in about 3 weeks again. Let's pop over to the sectors after this short word about our services.
Learn how to trade with the Trade with LA service provided to you by TA Today. This service includes daily portfolio and comments that are emailed to you before the market opens each morning. We provide a daily view of the markets and a model portfolio you can follow even if you work another job. Every weekend, LA records his weekend broadcasts that gives you a synopsis of the week and a prognosis of coming weeks. You will also have access to our Teach and Trade room, where LA provides day trades and teaches neoclassical concepts throughout the trading day. To get started, go to our homepage and click Trade with LA.
Okay, as we come back here, what we're really wanting to focus on in terms of the sectors themselves is it's the same tired advance with the same sectors. Now, I say tired, these sectors don't look very tired. I mean, they just keep jamming these things higher. The most, or the strongest one right here is the biotech. The biotech stretching up, making another ABCD, and I don't know how many it's made on the way up. This is another one. It stretches beyond and beyond. You got a nested ABC in here that was already done. You had other ABCDs before this one, of course, that were done, little small ones. You had another one back here, right? I mean, they just keep popping up and they keep going up and they keep finishing them off all the way up. And that's true here and it's true on a weekly. So the IBB, the biotechs, however you want to look at it, whether it's this ETF or another one, they keep stretching. So far, you haven't seen blow off top volume. These look like they're going to go higher again tomorrow. If I look elsewhere, another sector that's done okay but not great is the ITB. It's still hanging up there. Elsewhere, I'm looking for the other strong ones. Oh, the XLK, of course, had been strong, pulled back, and now is pushing back up again into resistance. The XLV, of course, tied to the biotechs, that's also strong. That one had the breakout, retest, regenerate higher. And the XLY had been extremely strong, and that's going back up, testing the highs here. At top 76.91, today it came just, no, it actually hit it. So that's actually a test failure. So this may have done what it's going to do, and this will be instructional to see what it does next. Outside of that, it's just mixed, I can't get going stuff. Here's the XLF. The XLI doesn't look too bad, but of course came back today, and that one actually looks like it's going to turn around and try to push back up. Consumer non-discretionary, this thing's struggling, can't get going. The utilities, struggling. Today, I believe they got over the top and back under. Yeah, so it's an over-under today. That may be it for that one. That really depends on interest rates right now. Even the SOX, which had been strong, continues to struggle on its way back up. IYT, we've talked about a lot. This thing's still range bound. Really, we're not seeing strong pushes in the sectors, and I guess that's not that surprising when we look at the indexes, and it's all tech, right? It's biotech, and it's a mainline tech like Apple, you know, some of the others, especially like social media. You know, this has been breaking out, got a nice big breakout yesterday and continues to try to push today. You got breakouts within the group. There's other groups that are doing the same. We can look at a couple of those. Solar is one of them. Here's solar coming back up to test those highs. And another one is the security stocks. I've highlighted all of these before. Here's Hack, and it's coming back up, although it's struggling as well. A number of these have been highlighted here, like hacking your way to profits. There's a number of these that I've covered already, and if you want to check them out, you can come to the front page and see them. So that's the sectors. We talked about the world markets. What about the OX markets? Let's take a quick look at those and see if there's anything there. And the big story there, of course, is the dollar, so let's start with that one. If we pop in and look at the dollar, you know, dollar had a huge impact day yesterday off the Fed news. Comes all the way back, halfway of that game, right, in a day. And then what does it do today? Gaps up huge and just stays up there. That's almost a takeaway bar on a 2% loss in a currency. That's huge, folks. I mean, it's huge. And this volatility you're seeing here is going to continue, I believe, for some period of time, and it's going to continue to wag the market's tail, right? Because the currencies are the largest market out there, and these moves have impact as a result. So the dollar, let me bring over to this. You can see it on a weekly. It comes down. That low was 25.75, got to 25.77, so it's still an inside bar on the weekly. It's going to have more volume this week. This is kind of a crescendo as it's going up. I don't know where it's going to peak, but my guess is right now, the way this looks, is it's going to be range bound for a while. But man, this has been a strong market. And if we go over and look at the opposite side of that, you can see just how these overseas currencies, in this case the euro, cannot get going. Big spike up yesterday, takes it almost all back today. And the same thing if we look at the yen, almost exact same case. Now, what was surprising today is that gold held up in the face of the strong dollar. Gold had gone down, had broken this swing point low, And this is on the daily. So the test here on gold as it comes back up is to try to get up and above this swing point low, right? Get over the top of it. That would tell you, okay, we're sideways again. The key or a clue as to whether it will or not, of course, is in the silver market, which is already doing that. Silver is already over that swing point low. It got over it yesterday, I believe. Let's look at it one more time together. Yeah, I think it got over it yesterday. Let's look at the numbers. The top was 1539. No, it actually didn't. So today it did. So tomorrow, and tomorrow's Friday, tomorrow silver needs to hold over it to kind of get the sideways thing going on this, and suggesting gold will do the same. And the reason you're kind of using this as your key is because if that holds, then if gold's going to work higher, then you can think about the gold stocks, right? And you can trade those if you want. So all in all, pretty strong outing again by gold in the face of a stronger dollar. I was going to look at oil right here before I cut out to the viewer questions. I've got a viewer question on TLT, so we'll just cover that one there. Now oil is doing a retest regen also, and it's doing it on this time frame and the weekly. It's trying to break as well. It broke already. That's this arrow. That was the break. It came back like a vengeance yesterday, just like everything else. And then today gives it all up, well, not all of it. It gave a good piece of it back. Closes back underneath that swing point low. So what is that? That's a retest with so far what looks like a regenerate to try to take this thing lower. And if it does break and stay down there tomorrow and breaks on the weekly, that could be a large move. So this is one to watch if you're interested in a short trade. Okay, let's come back with the viewer questions and take a look at those. All right, as we come back here, we've got a couple of viewer questions tonight. One of them has to do with Asher, which is a tracker of the Chinese Shanghai market. You know, this thing has been on a great move itself. ABCD structure finished it off and has extended beyond it. The hard thing here, this is a currency neutral, which is a good thing, right? It's a currency neutral. Had nice buildup in volume here and everything, but you know, the ideal thing to do is to look underneath this and look at the actual market itself. So I've pulled up the Shanghai market, and I'm using investing.com to do this. So if you want to look at it there, you can. This is a delayed stream, so it's actually, you know, live tonight. Looks like it's up slightly tonight. But let's draw in some of the stuff that's happening here. For example, you have an ABCD structure taking place here, right? And this is on the daily. And that structure is already extended beyond where it needed to go. If you pull this thing back and then, you know, try to pull, and the hard thing here is I don't have weeklies. Let me see if there's a way to get a weekly. I don't see how to get a weekly. So let's just do the weekly on the daily, which is kind of hard. But until I get my data such that we can do this again, I'm going to assume that's the weekly. The pullback would be to here, and as you can see, this goes way beyond the chart. Probably another, just glancing at this, probably another, you know, this was about a 40-45% move, so it's probably another 20% or so. So you can see on the weekly, it actually has quite a ways to go. On the daily, it's extended. And so when you look at it from that perspective, it's like, okay, how far can this thing go? I don't know. You got to break out multiple time frames. When it broke out here, it's extended straight up. You got a little doji yesterday. I suspect this thing's getting close to give you some sort of a pullback. I don't know that it's going to get this deep. I would think they'd buy it somewhere in here. And if I could pull the volumes up, and I don't have the volumes showing here for some reason, and I just found this today, so I'm not able to actually give you, you know, a great look at it. I've seen the volumes elsewhere, though. The volumes pushed up, and so you got a nice little crescendo of volume here So when this thing comes back, this area right here looks like the key area, about 34.49, 34.51. So that would be, and you know, it potentially might not come back that deep, but I suspect you're going to get something about right in there, and that's going to be the buy for what will be probably another nested, you know, A, B, C, D structure to take this higher again. So that's the way that kind of sets up. That's the Shanghai. So what does that mean in terms of the actual index over here? That means you probably come back into this 30, what is that, 38.86? So somewhere into that bar would be where I'd be looking. Okay. Let's take the other one. The other question has to do with the TLT. Let's see what that one says. And if we look at it, so the question is, LOLA, after the big spike in long bond prices yesterday, can you look at the TLT in your show tonight? It seems that the ABCD down wasn't complete. And what he's talking about, of course, was what we were looking at before, which was this ABCD structure that came down, right? That did not complete. You got cut short. And it seems that didn't complete, and the price is going to retest the highs. Well, I don't know that I'd jump to that conclusion yet, because you just finished an ABCD structure on the way up. So the most likely thing right now, and you know, we're talking about instruments that are getting whacked around based on currencies and you know, policy speak from the various central bankers. But it looks to me like what's going to happen is we're probably going to test back into this, do a retest, and attempt to regenerate higher. And that regeneration higher, of course, would be something like that, and then push up again and work you back up to this resistance zone. So I don't know about the highs. At some point, I do think it's going back to the highs. The trade higher is the right trade, right? I mean, you're counter trend trading otherwise. This is sideways. It actually is actually just starting to get going again on this, you know, that direction. But when you look back right farther, clearly this has had, you know, a big move up. It kind of got ahead of itself, pulled back pretty deep, and now it's trying to pull back up. But the trend up here is this way, and then certainly on the the monthly time frame, that's certainly the case as well. But you can see here on the monthly, these have been some huge, you know, gyrations in this thing, right? These are not small moves, especially when you're considering bonds. And right now, this does look like it's going to consolidate. It's doing a retest regen off this prior swing point high, and that bar is right there. It ended up holding it, and that's what it should have done. And that's going to try to regenerate higher. So I definitely wouldn't want to be shorting it. I don't know that it's going right back to the highs right yet. Maybe a little bit later. Okay, let's come back and do the final thoughts here. Okay, as we end the show here tonight, you know, I want to just re-emphasize this ideal of the preponderance of evidence. And what I mean by that is, you know, we don't have all these indexes in sync. And when that's the case, you know, you have to make a judgment call as to which side is stronger. Is it the bullish side that's stronger, or is the bearish side stronger? And you have to take and look at the whole picture. What's happening in the world markets, what's happening in the major sectors, what's happening in the various auxiliary markets, what's happening in the indexes themselves. And when you put all that together, right, then you try to see, okay, which ones are telling us the correct statement, right? And so far, the Russell was the one signaling, you know, as it held this gap right here, came back, did a retest, pushed back up and held there. It was the one signaling that, hey, we're going to try to go higher. And of course, it broke out, and it's the strongest, and it's pushing. And the fact that it's underneath that bar, just like the NDX and the composite, says this thing's going to probably try to go higher again tomorrow. The preponderance of evidence isn't down, right? It's not this case. It's this case. It's that it wants to try to push higher. And if you take that all that technical and then lay that on top of what's going on fundamentally, we know the economy's weaker. It's been, the numbers have shown that over and over. You had another Fed number today that was weaker. The Fed revised down all its numbers yesterday. That was why they rallied so much, right? Because they're saying, hey, they're not going to raise the rates. So when you look at all of that, right, you've got enough evidence here to suggest that, hey, the economy's not heating up. The Fed keeps telling us that even though we took out the word patient, we're going to be patient. And the calendar still favors, for the next 2 or 3 weeks before earnings, unless we start seeing a bunch of earnings warnings, still favors this market to try to push a little bit more. And then finally, something we don't talk about that much is what day of the month is it? And what month is it? We're in March. You've got less than 2 weeks before the end of the month. What is the end of the month? Well, it's the end of the first quarter. What do they love to do? They love to run them up into the end of the quarter. So you've got a lot of things that just kind of come together and say, hey, preponderance of evidence says this thing's going to try to move higher, and it's going to try to move higher until the end of the month. And then we'll deal with the earnings after that. And so assuming that's what it does, I would think that we get some sort of a pullback after that. And of course, if it does it before then, well, then that's probably not a good thing, because it really, at this point, given what's happening, given that backdrop I just explained, probably should head higher, not lower. Folks, thanks for joining me as always. I want to give you a heads up. Next week, there will be a Sunday, Monday show, and then I'm off the rest of the week. I'm taking a trip, so I won't be around. So just a heads up on that, for your calendar, so you're not wondering where I'm at. Have a great night. Thanks for joining me. Take care. I'll see you next time. Good night.